Hey guys, welcome back to Financial Markets. Hope you're all doing well, and hopefully you all had a good trading week last week. Obviously it was a very volatile market, but before we dig in and dive in, please do subscribe to this channel, like the video, and more importantly, I have a Cash App cash tag on the link in the description, and also the link to the Cash App URL. And so if there's any donations that you could do to help support this channel and help fund what's going on, obviously I'm doing this completely free here for all of you, and trying to give back to the retail community, obviously after being in the industry. And I just want to make sure that you guys are enjoying the content, and obviously because it costs me time and money, it is if any donations you can do, it will be very, very helpful. Anyway, enough of the plug, let's begin with the video. So it has been a very, very volatile week last week, as I just mentioned, and the reason being is because Trump and China trade tensions, if you will. Trump said that he's going to impose another 100 billion odd on Chinese imports into the country, and so that's put jitters back into the market slightly. And I think the most important key takeaway from that is to say that, look, the problem has never been solved, yet the market was rallying like 20-30% since the start of the year. And now the reason and what he's smart in doing, Donald Trump, is that he knows when the markets have now reached really good sort of near all-time high figures, he goes back out and says things that will jitter the market. Not because he wants the markets to get jittered, but because he wants to get those issues resolved. And he's just timing it with the market, so he's a bit like a trader in that sense. That he knows, oh, okay, I've made like 20-30% gains in the start of the year, i.e. from its lows. In a sense, as a president, obviously he's not actually put money in and making it, but the point is, as his presidency, he likes to use the stock market as a judgment. And so he's trying to think, okay, that doesn't matter now if I can take some risk off the table and let let the markets fall a little bit. So let me get done what I need to get done, because he needs to get done and he wants to get done the China trade issues resolved. And so that's the key point to take into account, because it doesn't matter what noise they put into the market about, oh, markets are fine, trying to trade deals are all good. It's not the case, and it has never been since the start of the year. It's just now the market's starting to realize that, oh wait, shit, the problem still hasn't been solved. And so it is it has been a really volatile week, and that's actually quite fun for traders like myself. But overall, the markets were, in fact, it's down 2% the week, but it was actually down close to 4%, and but we did have some recovery in the closing on Friday. And so the way, obviously, I've been mentioning in my previous videos about like recession and things happening, and we've had a big uproar and rally, so I have been short, and some of my positions have been stopped out, but I've still got positions in the S&P and the Dow that are still running in the tens of thousands on a position on short. And the reason being is because I'm still quite happy with the risk reward. So if we just go back to a 3-month, and so the markets have peaked here, and so if we think about it, if we was to go short, sorry, let's just go long. I'm just trying to figure out what the what percentage it will take to reach all-time highs again. So give me a second, sorry. Yeah, so look, 3% is your stop loss. So I can get in now on a short with a 3% stop loss. So if I just take, for example, $100,000 position, my stop is $3,000, basically 3%. Whereas my upside, so in this case downside, because I'm short the stock, so my upside though in terms of what profit I'll be making is 20-30%. So that's like 20-30 grand. And so for me, that's just really good risk reward, because if you just see the risk reward, is basically a 1 to 10 ratio. So 2 to 20%, for example, that's 1 to 10 ratio. So every one risk I'm taking, I have an option to get a payout of $10 for each risk I'm taking, which I'm quite happy with. And so that's why I'm quite keen on still being short the market, or having a hedge as a short of the market. You don't have to obviously go out and fully short the entire market, but it's definitely a plus to have some position on it as a short. But anyway, thought it would be a good idea to make a quick video on it. Hope you guys enjoyed it, and I'll see you guys in the next one. Bye.